Good morning, everyone. I'm Mark Phillips, and here at Harvested Financial, we are looking at the options markets and we are talking about systematic strategy execution and how you can find interesting things to do in the options markets. Whether you're looking to manage a stock position, whether you're looking to overall enhance your portfolio with a different allocation, or whether you're looking for some speculative plays that you can lean into opportunity capture, we are here making a difference in options every single day. So, what do we have on the radar today? Well, I want to talk about one of the big movers that we have just seen, and that is going to be TLRY. So, TLRY, we're on Thursday, we're looking at vertical strategies, and we're looking at how to manage a stock that has doubled in a week. Is there more upside and is there more downside? And actually, beyond just the interesting things that are going on in TLRY, just with the vertical price action and all the fervor that's going around with cannabis stocks, we're also seeing some other interesting headlines. So first of all, Reddit traders, once again, the famed Wall Street Bets crew that came after GameStop, they are starting to angle for pot stocks. We've definitely seen some of the long bias coming in here. We've seen a huge surge in shares over the past year. I believe TLRY is up something like 650%. So tremendous gains that we've seen here. And this coordinated online community has definitely been angling for these. But the backdrop behind all of this and some of that fervor is related to the TLRY and Alpha merger. So that merger is coming up on the horizon. It was announced in December, but right now there's been an increasing price dislocation between the shares. So that creates some really interesting opportunities, what we generally call merger arbitrage opportunities. And that fundamentally occurs because there's a difference in price between the price that is agreed upon in a deal and the price of which the shares are currently trading. And typically that price reflects a difference between or a probabilistic expectation of the chances of that merger going through. So to the extent that the shares are very much trading in lockstep, then you would expect that there's a high probability of that merger going through. So to give a back of the envelope explanation of what I mean, if TLRY is trading for $50 a share and Etheria is trading for $25 a share, that would imply a 0.5 ratio of TLRY to Etheria. So for every one share of Etheria, one held, one would get 0.5 shares of TLRY. Stock is twice as much. If that 0.5 is the agreed upon price in the deal, we would expect those shares to trade relatively closely to that. If it's unlikely that TLRY will buy Etheria, we will see that share price tend to lag a little bit. So I'm going to actually pull up a calculator and talk about what some of the merger terms look like here. So in the Etheria-TLRY merger, for every one share of APHA, one will get 0.831 shares of TLRY. Now, the prices are nowhere near that right now. So the stock's actually even moved since I made this card a couple minutes ago. But fundamentally, we're still seeing some pretty big dislocations. So based on the 0.831 shares of TLRY for every Etheria share, TLRY should, in Etheria terms, so with Etheria trading, around 23.12 when I did these calculations, it's around 22 right now. So fundamentally pretty close. If you believe the Etheria valuation, TLRY should only be worth $29. TLRY is currently trading significantly more than that. TLRY right now is trading around $48. So big gap between that $48 and that $29 valuation implied by the terms and the price of Etheria. Now let's flip that on its head. Let's value Etheria in terms of TLRY. So if we believe the $49 valuation in TLRY, and this was even more stark, by the way, a couple days ago. So TLRY is actually down 14 bucks this morning, or 22%. So this gap was even wider before. So Etheria priced in TLRY terms, taking that 0.83 and multiplying it by the $50 price of TLRY, or it was 56 at the time, would imply that Etheria is worth $43 a share. That's significantly more than it's trading for right now. So something's got to give. Something's got to give where either Etheria is going to end up being worth more or TLRY is going to be worth less. So how can we think about something in the options market? Well, I'm going to, of course, share my screen for everyone here and take a look at what some of the opportunities are here. So essentially, we are going to bet on Etheria rising and TLRY falling. And because it's Thursday vertical spreads, we're going to look at a combination of a call spread and a put spread. So I'm going to go out to the March Expo. So give about 30 days for this price action to correct. And with Tilray trading around 50, remember, valued in Ethereum terms, we were looking at Tilray coming all the way down to $29. So I'm going to go a little bit out of the money here. I'm going to buy the 45-35 call spread. So I'm giving myself a $10 vertical because I really expect Tilray to potentially go all the way down below 35. Now, implied vol is very high right now. So the implied vol right now is looking like, woof, 300 at the money, 290 on the downside. We see some interesting call skew here, but that's a different conversation. And fundamentally, that's making the spread very expensive because high vol means that the options are going to seem very similar. So the 35 strike is going to seem more similar to the 45 strike in a high vol environment than it would in a relatively lower vol environment. So even though there's a $10 put spread, it's still going to be pretty expensive. I'm looking at a midpoint here of around $6.80, but that spread is about $3 wide overall. So if you pay the offer, you're going to pay $8, and if you whack the bid, you're going to sell this for far less, for around 5 and change. So execution quality matters. Execution quality matters. It always matters. But pay around $6.50 for a $10 vertical. You're gonna see gains of $350 per spread that you put on with this $10 vertical if Tilray does come down. Now, on the other side, I'm going to leg into something in Ethereum because not only we're betting on a spread compression here, we're not just making a directional play. We're betting that Tilray goes down and Ethereum goes up. So pulling back up my calculator, we saw that Ethereum in Tilray terms would be expected to go close to 43. So to the extent that Ethereum is the leg that's going to pull up instead of Tilray being the leg that pulls down, what are we going to see in Ethereum? Well, I'm going to be buying a call spread. So looking at that $43 target in Ethereum, I'm going to go for an out of the money call spread. So we're trading around 23 here. I'm going to go a couple bucks out of the money, and to the extent that make sure I'm in March. So 23 bucks right now. Again, insane vol right here. So this is around 280, slightly lower vol than we were seeing in Tilray, but these options are again going to be expensive, and the spreads are going to be expensive themselves because that like option concept, where the option you're buying is very similar to the option you're selling in a high vol environment. High vol means there's a lot of range for that stock to go. So we're going to expect to see the defining that in a narrow range. Those options are going to be priced relatively similarly. But what are we going for here? Let's buy the 25 call to sell the 35 call. So again, $10 vertical. We can, a gross profit of potentially $10 on this spread, but we're only, unlike the $10 put spread that we just bought in Tilray, we're only gonna have to pay $2 for this call spread in Ethereum. The markets are actually a little bit tighter here. Overall, the market's only about $1.40 wide here compared to, that was almost $3 that we saw in Tilray. So significantly lower debit here, with a max gain of a max value on this spread of $10, so a max gain of $8. So if you put on both of these spreads, one or the other could both work out. When we're thinking about convergence, we could either see Ethereum come up and you can make the money on the long Ethereum leg, or you can make the money on the Tilray coming down. Or it could be some combination of both. Going back to that calculator again, to the extent that Tilray comes down to 29 or Ethereum comes up to 43, we're gonna see neither of those are fully gonna realize themselves. I think we're gonna see a spread tightening overall. So we could see profits in both of these or one or the other. But fundamentally what this does is it lets us get long a call spread in the undervalued name and long a put spread in the overvalued name, in the expectation that because of these terms of the merger, the valuation of these two companies will come back together. So vertical spreads can be used for a lot of really interesting things, and they're not just for directional speculation. Combined with a merger opportunity, they can really be used for some interesting merger plays here, like we see in this cannabis company fervor that's going on right now. So implementing these kinds of systematic strategies is what we do here at Harvested Financial every day, finding opportunities to take advantage of the options markets. Again, whether it's speculation like we're talking about here with some of these spreads, or managing overlays and managing stock positions. Perhaps you have a long TLRY position. That vertical spread, that put spread, could be a great defense against all the gains that you've seen. Like we said, 640% this year. So Harvested Financial, option strategy execution as a service. Check us out. Be sure to subscribe to us here on YouTube, and be sure to follow us on Twitter at harvested_DAFE, because derivatives are for everyone. And we here are going to be looking at the markets every single day with Daily Bread. So like I said, make sure to mash that subscribe button, make sure to tune in, and let's talk about option strategies.